Hey there, Matt Barker here with Clarity Wealth, and welcome to this week's Friday Fireside Chat. I want to talk something a little topical with you today. Talk about the Fed rate cut that happened just a few days ago. The Fed decided to go 50 basis points. Most people thought it was going to be 25. And I'm not here to debate whether that was right or wrong. I just want to share with you a couple reasons why the Fed may have decided to go with 50 instead of 25, or really decided to cut at all. One could be concerns over economic growth, both here domestically and overseas. If we tend to see that slowing down, that can often be a great trigger for the Fed to decide to cut rates. Second reason could be inflation control. We've obviously seen the cost of goods and services and things come down here recently. And so inflation's starting to get a little bit under control. And so the Fed can obviously decide that's a good trigger again to cut rates. The third could be labor market signals. I think maybe that might be the most prevalent one. We certainly see slower job growth. We see wages declining a little bit. And so the Fed obviously can cut rates to help businesses, stimulate them a little bit, make it cheaper for borrowing when looking at hiring decisions or employment decisions. The fourth could be global economic uncertainty. A little different than the first one I said, which was growth. This would be uncertainty about trade tensions, geopolitical conflicts, slowing growth overseas, things like that. Obviously, we want to make sure that we're domestically, appropriated correctly, and so the Fed can use the rates to mitigate some of that risk. The fifth could be easing, right, or quantitative easing, as you've always often heard. And so obviously the Fed can try and get ahead of the curve, right? They can try and cut rates, maybe before it's really needed. And so maybe that's a reason why we got 50 instead of 25. And then the last reason could be the financial markets or the volatility associated with that. I'm not so sure that'll play, that card will play right now. So the financial markets have been fairly strong this year, year to date, obviously been very positive. So I don't think that has a big factor in it. But again, these are all reasons why the Fed may act in a way that they do. Certainly we never know the exact reason as to why they might do that. But we just want to share this information with you. Hopefully it's helpful and can maybe ease your mind when thinking about whether this was good or not. Certainly if you have cash on the sidelines, that does mean rates are coming down a little bit, so not the most positive thing. But if you're buying, maybe you're looking to get a loan, whatever that might be, certainly rates are going to be a little more attractive now. So keep all these things in mind when you're making those decisions. As always, if we can help answer any questions or if there's anything we can do for you, we certainly encourage you to reach out to us, and hope you make it a great day.